Now, for an outlook for the fourth trading day of the week and the prospects for IPOs on the back of market strengthening in the last 18 months, I'm now being joined by Linus Iwajuku. He's the head research and market intelligence unit at Diamond Bank. Thank you so much, Linus, for joining us.
Yeah, thank you, Esther.
Well, let's get into general market performance yesterday ahead of today's opening bell. We've seen 2 days of a market rally. Yesterday, the market at Osha Index gained close to 1%, and we saw a mixed bag of gainers from the bank. But it looked like the banks and consumer goods stocks were top on investors' radar. Now, what was the driving sentiment yesterday, and could we see this continuing for the rest of the sessions this week?
Yeah, at the close of the market yesterday, we saw that the market continued on its recovery path, gaining for the second day consecutively. And just like you also noted, most of the stocks that boosted the market were including mostly the banking sector, because virtually all the bank sector shares gained yesterday, except for one or two of them that did not, gain. And we can largely attribute this to the expectation of, corporate results from the banking industry, because in the next couple of weeks we expect the bank to begin to release their Q3 results, and we can see that a lot of investors are beginning to take positions in some of these banks ahead of them releasing their results. But looking at the operating environment and looking at what has happened in the last 2 to 3 months in the operating environment, some of the results coming from this bank might come below expectation due to activities of central bank in terms of policy issues surrounding their activities, which have greatly impacted their capacity to generate revenue. So we expect that in the coming days, a lot of savvy investors will continue to approach the market, with a sort of cautious optimism, in anticipation of those results. But as we head towards the year end, we expect to see some level of volatility between the struggle between the bears and the bulls in the market. But ultimately, we believe that the bulls, will lead the market for some weeks before the bears will continue to dominate the market as we approach, year end, due to still uncertainties surrounding the operating environment, both locally and domestically, and issues surrounding the Christmas sell-off that we usually witness when the year is coming to an end.
Okay, Linus, let's talk about initial public offerings. Now, talking to you earlier, you believe that the market will see IPOs between now and the end of the first quarter of 2014. Now, I know that the market has had a relatively good run this year. It's returned so far about 31%. But what makes you so confident? Because you're given such a short time frame for the IPOs coming into the market.
Yeah, if you notice clearly that, since 2008, we've not really seen any IPO in the market, due to the effect of the, global crisis on the Nigerian capital markets. But looking at the event in the last 18 months, a significant improvement that we have experienced in the market, particularly because of the reforms and initiatives that the NSC and SEC brought to bear in the market, it has greatly reduced the volatility that we saw in the market, and investor confidence too has also, increased. And if you also look at the fact that, the market recently have been tested, through right offer and, introduction into the market, and all these have been successful. Owado has, were successful with their private placement, if at their right issue rather, Wema Bank too, Sterling Bank, Transcorp, all of them, came, with the right issue and they were successful. And this gives us, confidence that the market, has recovered largely enough, and it's time for IPO to return, to the market. So we expect between now and Q1 of next year that some, institutions, especially their two banks, may come into the market, with IPO, because it's even better for them and cheaper for them to raise, address their capital adequacy problem, by approaching the market as the market continues to strengthen. So we believe strongly that with the level of confidence that return to the market, with the level of reforms and initiatives put in place by SEC and NSC, that the market is, once again primed, to begin to welcome IPO back into the market. That fear that, a lot of people ran away from the market, with that if they come with the IPO, before this period, that will not be successful. I think that fear has greatly diminished in the market, and it's time, to begin to expect IPO. And we believe that this should happen before Q1, Q2 of next year.
Okay, Linus, let's step away from the market for a moment. Let's look at the broader economy now. The new mortgage refinancing company will be launched by the federal government in November. That's next month. Now, 14 states have been chosen for this pilot phase, and we understand that these states have promised to make land available. They're going to make the certificate of ownership available in weeks instead of months, as is usually the case. Now, what does this mean for the mortgage industry?
Yeah, I think this initiative is a welcome one. It's very good for the mortgage, industry and for the economy generally, because for an economy to actually move from economic to economic development, you require a very well-funded mortgage market and also well regulated. So this is a very good development, because if you look at the housing deficit in Nigeria, which currently stands about 16 million, and the kind of funding required to close this gap, which about 50 trillion if you build houses on the average of, let's say, about 3 million. But the existing mortgage company does not have that capacity, to provide this kind of funding. And housing is very, very important if the economy needs to actually, grow. So with this development, that we expect that the MRC will be launched sometime in November, and with the 15 states as pilots, it's going to completely change, the mortgage industry, because it's going to, take off the existing mortgages from them and release cash for them so that they can create, new mortgage. So it's a welcome development, and we believe that if this happens, it's going to, help close the, housing deficit in Nigeria. But I mean about 25% in the next 5 years. And funding to, shouldn't be too much a big problem, because IFC is supporting African development. Is also come with about $400 million, and even the government is going to raise funds too to also support the initiative. And so we expect that this should all go well for the economy, should all go well for the the mortgage market itself. But there are some one or two issues that is begging for answer, especially why can't government, for instance, support the existing mortgage institution, or even revamp the federal mortgage bank. And the effectiveness of this policy, especially being driven by the government, is also an issue that some analysts are a little bit skeptical about.
Well, Linus, thank you. We're going to have to leave it there. Thank you for taking the time out to share your thoughts with us on markets and, of course, the mortgage space. With that has been Linus Iwajoku, Head Research and Market Intelligence Unit at Diamond Bank.